Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. I was out on Friday, out of town, attending a funeral, so I didn't make any comments. But I did want to make a comment today. I'm just going to cover all of my open positions right now. So with that, let's get into it. This is a big picture, S&P 500. And what I really want to point out here is that why we've hit all these higher highs from 2018, we've gotten lower highs on our RSI. So that flashes a caution sign. Beware, a change of trend is going to happen at some point. And with the size of this negative divergence, it's going to be substantial. This is the largest I've ever seen. It's larger than 2000. So again, that's in the back of my mind, and I scale my positions accordingly. Not quite as aggressive as I might be if there was no negative divergence. So this isn't a call on the S&P today. I'm just pointing that out. Let's move on. There's always things that technically look good. So let's take a look. Crude, this is one that had a disappointing week last week. So we thought, here's a downtrend, the two parallel downward sloping red trend lines that were broken out of, and then the consolidation into a tight symmetrical triangle on the shorter term chart. We thought we had a breakout. It wasn't a very convincing one. It was on mediocre volume and just didn't look like a real clean breakout. And sure enough, it wasn't. I mentioned that on the last update. My cycle analysis, my simplistic cycle analysis suggested a low in early 2024. And so for the next year and a half or so, prices should go upward. But this is, a nice size pattern. One, two, about 2 years in the making, and it's gathering energy as it consolidates, as it compresses, and when it breaks, either up or down, it's going to move a long way in a short period of time. So let's take a closer look here. And here's the symmetrical triangle. I'm using USO, the ETF. Again, I would use this in tax in IRAs and tax-free type accounts, tax-deferred accounts, because it does issue a K1, and you don't have to worry about that if it's in an IRA. If you want a taxable account and you want this investment, I would use OILK. It does not generate a K1. So here's a symmetrical triangle. Thought we had a breakout here, didn't. Thought we had a breakout here, didn't. But it still looks intact. It still looks in good shape. So it's just going to take some patience here. And so on Thursday, when I talked about this, uh, I wasn't convinced of this breakout. It was not dramatic. There was no big volume bar here. And so let's take a closer look at this little bit, this last uptick, and then the little pullback we got. And I had a stop placed at 78 on USO when we broke that today. So, what if you stalled on that, it's fine. I don't think you have anything to change at this point in time. I would be patient and watch. Uh, I want to close above 80 on USO to be a buyer if I was out of it. If I was totally out of the position. Um, and what did I do? I sold a good amount, but not everything. That was just my preference, and there's no right or wrong. It depends on your investment style. And the other thing that kind of changed my mind on selling it all was on actual crude oil. We got a bullish hammer today. And let me go back. I'm sorry. So USO, it looks like we're going to get the cluster of moving averages is going to eventually connect, which would suggest that it'll push prices down lower. But when I look at that's the problem with ETFs. They don't always track the underlying security very well. And crude oil, you can see, is closer to touching here on that convergence. And we also got a bullish hammer. So, meaning buyers came in intraday and pushed it back up. So, what normally happens when the prices touch or when the moving averages touch, the share price will stop going down in this case because it's a bearish convergence. Uh, and it can either just stop and sit here until the moving averages come down, or prices could come back towards that cluster of moving averages, which would give me an out at a higher price if it's not able to break above. So if it comes back towards that cluster of moving averages and is unable to break through to the upside, it promises a lower low. So uh, I kind of split my bet here, and we'll see what transpires. But even on this chart, these moving averages are not touching yet, meaning that the pause has to happen, or the retracement has to happen yet. So it's kind of a muddled picture, but I would really focus on the bigger picture. That's what I'm going to do today on most of these charts. I'm going to look at the big picture, and this, again, we don't have a clear breakout, but the consolidation is still intact. It looks like we're coming to at least the end of a down move in oil, which will give us more color in the next couple of days. And when I look at the point and figure chart, again, the least subjective chart, uh, pure supply and demand, our bullish trend line is still in place. So, all in all, I feel good about oil. I didn't feel as good as I did a week ago, but I don't think all is lost here. And our energy stocks, Marathon Oil, MRO, looks fine. Nothing's changed. It sold off at the end of last week and it had a little bit of a down day today. But again, this consolidation looks fine. So this is still one of my recommendations. This is still intact. Nothing has changed. And the point and figure chart is still intact. And blue bullish trend line still intact. Everything looks great. This was another energy stock that I suggested that doesn't look so great. So here was the inverse head and shoulders, shoulder, head, shoulder, neckline. It had a breakout. The price projection was 1950. It got to 1810. It was up, I don't know, 7 or 8% that day, and was up 5 or 6% the day before. So of course I was selling on those up days, as I encourage you to do. Whenever you get a big up day, you want to sell some because of stuff like this. So now we were stopped out, and so prices are sitting down here. And at this point in time, I'm looking for more direction on what to do here. Um, so I sold some on the break. It went down low. The convergence happened. Prices still haven't come back. But when I look at the big picture, I still haven't sold all of mine because of the big picture, the big ascending triangle where we're right on the support line. So, and we also had like epic volume a couple days ago, like actually on Friday. So that tells me that people are throwing in the towel, and the weak hands are selling, and I don't want to sell everything into that. We'll see if that's a good decision or not. But normally, something like this will mark an important low. And believe it or not, the point and figure chart is still intact. Here we have our blue bullish trend line barely. So this thing can't go down a whole lot. If it breaks this, I'm out totally. I will be done. Calumet Specialty Products, adios, and move on to something else. So we're kind of at an inflection point here. And okay, so other positions that I've been bullish on, the utilities select sector spider fund ETF, still intact. The inverse head and shoulders, shoulder, head, shoulder, neckline. We're looking for 76. We're not there yet. We got to 72, got a pullback, suggested buying on that pullback. So whenever you get an update, you want to sell a little bit. Today up close to 1%. I sold it, a couple shares. So that's just the way that I do things. Last week I was buying some. I'm buying less than I was down here because again, the reward to risk is no longer as favorable. I'm looking for 76 on the upside and we're close to 71. So the upside is limited. I hope that makes sense. I will be moving my stop too up here to 67.60 or 50 or something around here. Haven't done that yet, but we'll be doing that. Southern Company, same thing. At a big up week last week, I was selling into that. We're looking for a $90 price projection, so still have, I don't know, 10% to go. Again, the reward to risk isn't as good as here, but I still have a good position in Southern Company. Nothing's changed here. Abbvie, ABBV, still intact. Everything's fine. Still looking for 195. Gold miners, everything good. Everything looks intact. Our big inverse head and shoulders, 3.5 year patterns, monsters. Left shoulder, head, right shoulder, neckline, breakout. We're looking for a price projection of 50. We're at 38. We got our stop. We moved it up a little bit to about 32.50 or so. And so the reward to risk is still really favorable here. So you want to buy on down days, you want to buy a little bit. On up days, you want to sell a little bit. REITs, initiated with a couple of REIT recommendations, and one was National Retail Properties a couple of weeks ago. And you can see the big inverse head and shoulders, left shoulder, head, right shoulder, neckline. The breakout suggested 52. It got up to almost 47. On some of the updates, I've been saying sell into this, sell into this, sell into this. So I would continue to do that. We're starting to get overbought here. So, again, the reward to risk here isn't as favorable as American Homes for Rent, the other REIT that I recommended that hasn't really done much. It's been kind of flat. It had a nice day today. I sold a little bit because I've been buying on all these, on every dip I've been buying. So this is one that you could buy today and your stop's at 35, your price projection on the upside of 46. So the reward to risk is very favorable. China, still bullish on China. Um, have a possible inverse head and shoulders forming. Again, this is a nice size pattern if it does develop a right shoulder. That would be about a year and a half in the making. The original stop was down here at 24. We've raised that up just a little bit to below this convergence of moving averages, which hopefully holds us support right here. So that's kind of where we're at. The Elliott wave theory says we have a 1, 2, 3, 4. We should have one more high before we get a little bit bigger correction. How that happened, but fixed income, 20-year treasury, still bullish on 20-year treasuries and other fixed income. Our inverse head and shoulders here, left shoulder, head, right shoulder, neckline suggests 100, 100. And we're currently at 92.50. This has been kind of a seesaw event, but you can see our bullish channel here with the two upward sloping blue trend lines. So still bullish, nothing has changed. And copper, this is one that we've been stopped out of. So we got stopped out on Friday with a break of 430. So what does that mean? I'm going to watch and see. Right now, nothing to tell me to get back in. So I'm going to stay. The one caveat is I would mention that the bigger picture on copper, there's a huge, I think it's like a 5-year pattern, bullish pattern, that if it can It got up right to the top of resistance of that pattern, but wasn't able to break out. So I'm looking to get back into copper. I just haven't found a reason to yet. And the copper point and figure chart still intact. Our blue bullish trend line is still there. So I'm going to watch it and see if something bullish develops, and you'll be the first to uh, you'll be the first to that I'll let know. So thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. And thank you. Have a great evening. And we'll talk. I'll be back soon. Thank you.